Good morning once again. So let's have a very quick review of what we have discussed so far as regards ratio analysis. So we said that ratios are very important because it helps us assess the performance of the firm in two aspects: over time, okay, and number two, uh, with regard to its relative comparison to their direct competitors. So we do not analyze ratios in isolation. We do not analyze them in a vacuum. It's always contextual. It's always taken uh, in reference to time. Okay, how much was how has the company performed over the years, and in reference also to their direct competitors. Okay, so far what we have done was to look at the common size statement or vertical analysis, where we said that these ratios provide us with a snapshot of how the company has been performing relative to a certain measure, which is, in the case of the income statement, its sales. So if you take a look at this, for example, 0.824, that means that for every peso of sales, the company incurred 82 centavos of cost. Okay, now that's always taken in the context of the previous years. So 2021 performed better relative to 2020, because in 2020 it cost the company 85 centavos for every peso of sales. Okay, in fact, if you take a look at the total operating cost in 2021, the company was generated 93 centavos for every peso of sales, while in 2020 it was almost the whole amount. The whole amount, practically 1 peso of total operating costs per peso of sales. No wonder the bottom line, the company was at net loss. Okay, compare that with 2019, 2021 was better in terms of operating costs is concerned. Okay, the bottom line natin, guys, 2020 seemed to be a very poor year for the company because its profit margin was negative. Kasi negative nga yung net income after tax nila. Okay? Now we also looked at the horizontal analysis. Or the year-on-year analysis. It takes a look at the growth of each account across time. So for example, sales between 2020 and 2019 grew by 70%. Tapos dito naman, 2021 and 2020, it grew by 20.6%. So there was a huge, bigger increase in 2020 relative to 2019 as compared to 2021 relative to 2020. However, guys, if you'll take a look at the cost components, guys, no, ang laki naman ng increase ng operating cost sa 2020. Kaya kahit na even if the sales increased by 70%, the cost ratio, operating cost ratio increased by 80.5%. So it just swallowed everything sa increase ng sales natin. While on the other hand, sa 2021, okay, although sales increased only by 20.6% relative to 2020, yet the cost increase was smaller, lower. So mas malaki yung increase ng sales. No? Okay, so this is how we look at the measures, these ratios in terms of common size statement and horizontal analysis. No? Okay, then for the balance sheet, we look at it in terms of the total assets or the total liabilities. Now here, guys, we did not do the statement of cash flows, but some of you submitted the statement of cash flows, which is very good. I hope that as an exercise, kindly do this, itong statement of cash flows na to, kasi kasama yung statement of cash flows sa exam natin this coming Wednesday. So here you're going to investigate the increase in cash. So kung titignan natin, guys, cash increased by sa 2021 and 2020, cash increased by 6718. So you'd like to see here, guys, sa totals natin dito, dapat 6718 din to. Okay, so I'm sure you'll be able to do this, guys, and it will be a good exercise for you to do this and also construct the formal statement of cash flows. Okay, All right, so we mentioned something about the common size statement for the balance sheet. Everything is pegged to total assets. No? So in this case, in 2021, yung investment ng company was really more on working capital, 76% on total current assets and 23% lang nung fixed assets. In 2020, there was more, kasi nag-increase ng malaki yung fixed assets natin dito no 2020. Kaya ang balance siya, 67% yung current assets, 32% yung fixed assets. Okay? And also, yung liabilities and equity natin gives us a snapshot of how the company is financing its assets. In 2021, ang total liabilities natin, 43%. Ang total equity natin, 56%. However, things were really different in 2020 kasi nagballoon nga yung debt natin because of a huge borrowing in long-term debt, 323, then naging 1 million siya. So lumaki yung debt natin. Pero noong 2021, lumaki naman yung equity kasi by virtue of the huge infusion of capital by the owners. From 460 yung common stock, naging 1680 noong 2021. Okay? So, nag-balance out siya nung ang equity ratio natin 56% noong 2021. While in 2020, it was only around 20%. So, ang laki ng binaba ng equity ratio noong 2020. Okay, so, all right, we also looked at the several measures, yung NOWC natin, TOC, and the net investment. So although malaki investment ng TOC noong 2020 vis-a-vis 2021, and yet yung yung NOPAT natin mas malaki noong 2021, no? So medyo hindi maganda yung performance natin noong 2020. Kasi kahit na nag-increase tayo ng operating capital na 1.12 million sa 2021 447,000 lang, yet yung operating profit natin really defeated the operating profit of 2020. And so the result was that yung ROIC natin, okay, was greater than the WACC in 2021, greater than 10% kasi 13.4% siya. Pero noong 2020, 0.9 lang or barely 1%. Ang WACC natin 10%. So value was destroyed in 2020. Kaya kita natin yan sa EVA. Economic value added, negative to, as compared to positive in 2021. Okay, so we looked at these measures last time, okay, and then here are some questions which are very important. Kindly read through this these questions because the answer are actually here and the answer are in how we discuss this today. Okay, so far guys, I think dun sa lecture natin hanggang asset management ratios tayo, no? Okay, so let's quickly review this. So there are 5 general types of ratios: liquidity, okay, asset management, debt ratio, profitability ratios, yung PR, tsaka yung market value ratios. We're going to take a look at this one by one now. Okay, liquidity ratios tells us about the capability of the firm to pay its current obligations or current liabilities as they fall due. And okay, ko lang dito cash divided by current liabilities. Okay. In fact, nakita natin dito ang ratio natin, current liabilities, lahat. So everything is pegged to your current liabilities. We'd like to know if the firm is capable of paying its current liabilities, current obligations when they become due. So current ratio, guys, includes only yung whole current assets, yung buong current assets natin. And we look at this over time, across time. Sabi natin, in 2021, the company is really more capable of paying its current obligations relative to 2020. Kasi sa 2020, 1.5 lang eh. In 2019, mas capable pa rin tayo ng 2021 kasi sa 2019, 2.3. However, guys, our direct competitor or the industry is performing better in terms of its capability to pay its current obligations. Kasi 2.7 pesos sila for every peso of current liability as compared to our 2.6. Okay. Now, a stricter measure is quick ratio. Si quick ratio guys, ang sinasama lang natin yung most liquid assets yung tatlo. Cash, marketable securities, and receivables. It does not include inventories and prepayments. Kasi si inventories, hindi pa liquid yan kasi pwedeng raw materials pa lang yan. No? So matagal pa muna bago ma-convert into cash yan. Well, this one, si cash, of course, cash na. Si marketable securities, madali nang convert into cash, and then receivables kasi nabenta na yan. So relatively, these three assets are the most liquid ones. So we add them in order to generate the quick ratio. So the company, 0.9. Ibig sabihin, pag may current liability na maging due, meron tayong 90 centavos making use of your cash, marketable securities, and receivables in order to pay our current obligations. So there was an improvement relative to 2020 kasi 0.5 lang siya, and also 2019. However, we fail in comparison to the industry kasi sa industry, much lang siya, 1 peso of quick assets to pay off its current obligations. Okay, the most strict measure guys is the cash ratio. Itong cash ratio, cash lang talaga divided by current liabilities. Okay, in fact, if we're going to be very strict, 1 centavo lang ang available na cash ng company in order to pay a 1 peso of current liability. Okay, although nag-improve siya over time, okay, mas mababa siya nga siya ng 2019, pero still, hindi pa rin siya capable. Kung in case na wala siyang marketable securities, tapos yung receivables, matagal pa muna bago makulek. So that can be difficult for the company. So that would mean the company might need to borrow in order to pay off its current obligations. Okay, so those are the ones that took care of your liquidity ratios. Then next, we have your asset management. See, asset management, it tells us how the firm is able to utilize its both its working capital, its current assets, and its long-term assets. So here, meron tayong mga turnover ratios. So this was what we discussed last time. Yung mga turnover ratios, very important to. Okay, what it measures is number of times. No? For example, let's have a quick review. Inventory turnover, noong 2021, 3.9 times tayo. Ang ibig sabihin yan, the company is able to buy raw materials, convert to finished goods, sell. 3.9 times a year. Okay, so 3.9 times siya nagagawa yung buy raw materials, convert to finished goods, and then sell. Ulit, buy raw materials, convert to finished products, and then sell. 3.9 times a year yon. Okay, and then there was a deterioration in terms of the velocity of inventory turnover. Kasi guys, in inventory turnover, the higher, the better. Okay, noong 2020 nga, 5 times tayo tapos naging 3.9 times tayo. So the company has to investigate this. Bakit bumagal? Bakit bumagal yung number of times natin na nata-turnover inventory? In fact, talon-talo tayo ng competitor. Kasi sila 6.1 times sila nagagawa yon. Okay, tayo ano lang, tayo ang ginagawa lang natin yan, yung 3.9 times. Okay, so dito ang ginamit natin is the cost of goods sold divided by average inventory. Yung ibang ginagamit, inventory beginning. Okay? But for our purposes, gamitin na natin yung average inventory. So bumaba yung performance natin compared to 2020, and we fail in comparison to the industry, to the direct competitors. Kasi sila 6.1 times silang nagagawa po ulit-ulit yung activity na yan. Okay, next, si ARTO. Ano naman si ARTO? Accounts Receivable Turnover. Number of times din to. So lahat ng mga turnover guys, number of times yan ang binibilang. Si ARTO, number of times the company from the selling of from the sales on account up to collection, 9.3 times yan. Okay? In fact, noong 2020, 11.9 times. Mas mabilis pa. Mas mabilis pa yung velocity ng collection. Okay, talo tayo kay direct competitor kasi siya 10.2 times. Okay? 2021 and 2021 ang industry, we fail in comparison kasi 10.2 times sila nako-collect yung kanilang receivables per year. Tayo 9.3 times. Okay, how about this apto? Ano yung apto na to? Okay, 13.6 times, ibig sabihin this is the number of times a year tayo nagbabayad ng ating payables. No? So that's, bumili tayo ng supplies on account or raw materials on account and then babayaran natin. So sa isang taon, 13 times natin binabayaran yan. Okay? Si industry 15.1 times lang na mas maraming beses, no? So ibig sabihin, pag mas maraming beses yan, okay, ibig sabihin mas matagal sila bago magbayad ng payable sila, which we're going to discuss in a while. Okay? So these are the turnover ratios. So medyo nakakalito din pag titingnan natin yung number of times, although naiintindihan natin siya, pero mas maganda kung number of days natin titingnan. Okay, so si number of days related yan kay number of times. Kasi pwede natin i-convert si number of times kay number of days. So paano natin gagawin yan? Okay, we have to know the number of days per year na go-operate yung company. So dito we're assuming that daily sila, okay, 365, and we gave this a name. Titingnan nyo guys dito. Ayan, oper days. We gave this a name, oper days, operating days. So paano natin i-convert yung number of times sa number of days? Simple lang yung formula. Yung operating days divided by the turnover. Okay, for example, days inventory outstanding or average inventory period is just your oper days divided by the inventory turnover. So what does this mean? It takes the company 95 days. Okay? So 95 days ang interpretation na to. 95 days for the company to buy raw materials, convert to finished product, and then sell the items. 95 days yun. Okay? So 73 days. Okay? Kung yung turnover guys, the greater the better. Yung days naman, the lower the better. The lower the better. So baliktad siya. Kasi opposite yung ratio niya, no? Opposite yung ratio. Okay? 95 days, ibig sabihin, almost 3 months bago natin nako-convert into finished product and then nasa sell. No? More than 3 months. Samantalang si direct competitor natin, 60 days. So ibig sabihin, within 2 months time, si direct competitor nakabili na ng raw materials, nagawa into finished goods, and nabenta. Okay? Tayo on the 60th day, hindi pa natin tapos yan. Ha? So on the 95th day pa natin bago nabibenta yung goods natin. So pag days inventory outstanding, of course, the lower the better. Opposite ng turnover. Okay, so turnover guys, pag mas mataas yung turnover, mas mababa yung number of days. Okay, and we want a lower number of days kasi ibig sabihin nun, yung velocity ng paggawa mas mabilis. In fact, 2020 mas okay pa tayo kaysa 2021. 73 days, okay? Pero talo pa rin tayo sa direct competitor kasi si direct competitor 2021 to, no? 60 days siya bago niya nabebenta yung goods. Tayo 95 days. Okay. Next, days sales outstanding. Ito naman guys, pinsan ni R2 to. No? Receivables turnover at saka days sales in reciprocal reciprocal cousins or brothers. No? Okay, sabi natin, the bigger the R2, the better. Okay? So kung titingnan natin yung R2 natin, 9.3, si direct competitor, 10.2. So how does that convert into number of days? Okay, so oper days ulit, oper days divided by your R2. So ano ibig sabihin ng 39 days? Ibig sabihin yan guys na it takes the company from the sales on account to collection, it takes the company 39 days. Si direct competitor natin, in 15 days, nakokolekta na niya yung receivables. Okay, so sino mas magaling na performance in terms of managing their assets? Of course, si direct competitor natin. Kasi within 15 days, collected na kagad nila. Tayo within 39 days pa. Okay? So magbibilang po tayo ng 24 days on the average para makolekta natin yung receivables natin. Sila nakolekta na. Okay, next. Days payable outstanding, related naman yan kay apto. Okay? Ito naman, ano ibig sabihin nito? Si apto natin. 13.6, 15.1. Pag dinivide natin si operating days by the apto, what happens? 27 days, guys, versus 90 days. Ano ibig sabihin 20 days? Bibili tayo ng raw materials, then babayaran na natin kagad in 27 days. Average yun. Okay, is that good or bad compared to 90? Well, ang ibig sabihin yan, guys, dalawa lang yan eh. Either hindi kagad makabayad si company or binibigyan siya ng mas mahabang credit terms. So most likely, si direct competitor natin, binibigyan siya ng mas mahabang credit terms. Maybe, probably because mas magaling siya na magbayad dati, so binigyan siya ng mas mahabang credit limit, or may power siya over the customers. Ibig sabihin, customers would want to become part of the customers of our direct competitor. Kaya willing sila na magbigay ng terms na 90 days. Tayo guys, 27 days, kailangan natin bayaran si supplier natin. Sila 90 days. So this can go either way. Either hindi sila makabayad kagad, which in this case, hindi naman. Looks like the benchmark company, the competitor, is a better performer. So binibigyan siya ng mas mahabang credit terms. Tayo, mga 30 days lang, 27 days nga lang. Okay? All right. So now we combine this either yung yung number of times or yung days outstanding to compute for the operating cycle. So ano yung operating cycle? It's just the sum of your DIO and your DSO. Okay, 134. Ano ibig sabihin yan? Ano ibig sabihin ng 134 days? It takes the company 134 days to buy raw materials, convert to finished goods, sell, and then collect. 134 days. So yung cycle na yon, operating cycle, okay, so we call it cash to cash cycle kasi nagsimula ng cash, bumili ng raw materials or umutang ng raw materials, tapos makukolektan natin receivables. Halos kalahating taon, ano? Kasi kalahating taon, mga 180 days. So ito, mga 4 months, 5 months, no? Bago natin nakukolekta yung receivables. Samantalang si direct competitor 75 days. Okay, so direct competitor mga 2.5 months. Okay? 2.5 months nakolekta na nila. Tayo mga 5 months. Okay? 4.5 months. So wala, talong-talo tayo in terms of their managing the assets, no? Okay, kasi 75, ibig sabihin, ang bilis yan, no? Ang bilis ng turnover. Within 75 days, nakolektan natin receivables natin. Nabili na yung raw materials, na-convert na in finished goods, nabenta na, nakolekta na. Tayo, 134 days. Okay, in fact, mas magaling pa nga yung 2020 natin. Nag 104 days lang tayo. So something also happened in 2021. No? So bumagal yung operations, bumagal yung pag-convert into finished goods, and then pagbenta, 95 days na eh. 73 days yun noong 2020, ito yung talaga nagpalaki. Oh. Tapos pati sa pag-collect natin, 39 days na, dati noong 2020, 31 days lang. So the companies seem to be quite slow in the operations and also in the collection. Okay, so that's your operating cycle, yung cash to cash. Okay, tambak na tambak tayo dito guys. So 75 days, halos makakadalawang round na yung competitor natin, magwa 150 days na siya bago natin matatapos pa lang yung unang cycle natin. So that tells us a lot about the performance of the firm. So not very good in terms of managing their assets. Okay. To compound the story guys, meron tayong tinatawag na cash conversion cycle. Ano naman yung cash conversion cycle? It's your operating cycle minus your DPO. Okay, explain natin to ha. So yung cash conversion cycle natin, 100 days. Okay, samantalang si direct competitor, negative 15. O may negative 15 pa dito, ano ibig sabihin nito? So let me show you the illustration. Ito. Okay, ano ibig sabihin ng cash conversion cycle? Okay, the cash conversion cycle is equal to, it's equal to this is your days inventory outstanding, 95 days, plus days sales outstanding. So the total of that is 134. That's your operating cycle. Okay, 134 days. Muna natin bago ma-convert yung bumili ng raw materials, convert to finished goods, sell, and then collect. No? 134 days all in all. Okay. Then, okay, 134 days yan. Tapos, tingnan nyo to. Okay, 27 days. Ano ibig sabihin 27 days? Ano lang guys, a minute. Okay, sorry about that. Okay, sorry about that guys. May ano lang, may nag-ano lang. Okay, so 134 days guys, yung ano natin, yung operating cycle, yung cash to cash. Naglabas ng cash, makakakolekta ng cash. 134 days. Kaso guys, kailan natin babayaran yung payables natin? Yung days payable outstanding, 27 days. Okay, di ba? So on the 27th day, kailangan bayaran na natin si supplier. Eh, kailan pa natin makukolekta yung cash natin from our operations? 134 days pa. So, may gap tayo nito, no? May gap tayo. Anong gagawin natin? Hihiram tayo dito on the 27th day. Mag-short-term loan tayo. Okay? Tapos, kailan natin mababayaran yan? Yung short-term loan natin. 134 days minus 27 days. So, 107 days. Ito guys yung cash conversion cycle natin. This is the number of days for us to pay the loan. Okay? So the higher the cash conversion cycle, ano ibig sabihin nun? The higher will be the interest expense. Kasi inutang lang natin yon, kailan natin mababayaran? 107 days, mga after 3 months, after 3 months pa, no? Okay? So a very high cash conversion cycle is not good. Okay? Kasi ibig sabihin yan, hindi pa natin mabilis natin dapat bayaran yung suppliers, pero matagal tayo muna makakolekta ng receivables natin. So dapat medyo may balancing out yan. No? Tingnan natin si competitor natin. Si competitor natin, ang cash conversion cycle niya, negative 15. So paano nangyari yun? So tingnan natin days inventory outstanding niya, 60. Days sales outstanding, ibig sabihin within 15 days, nakukolekta na niya. So ang operating cycle niya, 75. Okay, cash to cash yan, 75. Bibili ng raw materials, convert to finished goods, sell, and then collect. In 75 days, nagagawa na niya yan. Okay, kailan siya magbabayad ng payables? Days payable outstanding, 90 pa. Okay, so ibig sabihin, on the 75th day, nakolekta na niya yung cash niya, pero dito pa siya magbabayad ng suppliers niya. Okay? So ibig sabihin, 75, which is the operating cycle, minus 90, may negative 15. Ano ibig sabihin ng negative 15? Sa cash conversion cycle, pag negative guys, okay yun. Okay. Kasi, ibig sabihin nun, meron pa siyang number of days para magamit yung cash niya bago niya mabayaran si suppliers for whatever purpose. Kung pwede niya ilagay yan sa marketable securities, may interest pa yun, no? May interest income. So, a negative cash conversion cycle categorically signals something good for the company. Okay? A positive cash conversion cycle, okay lang din, pero dapat hindi malaki. No? Kung manageable lang yan, okay lang guys na mangutang na muna yung company for a few days bago nila makolect yung payable sila. Kasi bakit din sila nagbibigay ng mataas na terms sa sales sila para makapag-spur sila ng sales, no? Kasi kung hindi sila magbibigay ng terms, baka walang bumili sa kanila o baka mas konti lang yung bumili. No? Okay, ang terms niya 15 days lang yung direct competitor natin. Si company natin 39 days pa nga, di ba? Mas malaki yung natin on the average yung yung days sales outstanding natin. Okay? Pero ito talaga yung pinakamalaki natin, 95 days. Oh. Natatagalan tayo ma-convert yung raw materials into finished goods and then sell. Saka kalaban natin 60 days lang. Okay. Now, a negative cash conversion cycle categorically is good, no? Kasi ibig sabihin nun, nakolekta na natin yung pera bago natin bayaran yung supplier natin. Okay. Pero guys, may caution dun, ha? May caution dun sa negative cash conversion cycle. Kasi may mga ibang companies like SM for example, no? SM pays their customers a long time, no? Kunyari, example lang, ha? Ang DPO nila days payable outstanding 180. Okay? Sabihin natin ang operating cycle nila 30 days. Ibig sabihin, na-collecta na nila yung receivables nila within 30 days. So what will be their cash conversion cycle? Their cash conversion cycle will be operating cycle na 30 days minus DPO na 180 days. So negative 150 yan. So what does that mean, guys? 5 buwan. 5 buwan pwede nilang magamit muna yung na-collecta nila bago nila bayaran si supplier sila or yung customer sila. Okay, di ba? 150. Now, is this good or bad? Theoretically, guys, ang ganda, ang taas-taas ng negative cash conversion cycle. More days, guys, to invest, more days to potential earn interest. Okay. However, guys, itong ano niyan. Remember that the company does not operate in a vacuum. And kapag masyadong mahaba yung terms na dinidemand nila sa suppliers nila, ito guys, magiging problematic yan sa supplier. Kaya kailangan yung supplier nila dapat ang haba-haba ng PC. Kaya may mga kaibigan ako guys na they used to do business as SM pero hindi na kinaya kasi grabe yung grabe impact sa cash flow nila. Okay, so yung soul of the corporation guys, kailangan titingnan din to, no? Okay, theoretically this is good pero kung titingnan mo lang yung performance ng firm, but how about a symbiotic relationship? Okay, how about yung pool system ni Toyota? Di ba? Okay lang naman guys kumita. Okay lang siyempre, kaya nga nagnenegosyo. Pero tempered naman dapat guys. Dapat may soul din dapat. No? Dapat may soul din yung corporation. Natitinan din yung kapakanan ng mga customers. Kasi di ba kung wala ring in this case, suppliers sila, which are also their customers in a sense, paano na lang din yung existence, no, ng business. Okay, so this might be guys exaggerated pero medyo ganito guys yung ganito yung talagang terms. Okay? So in a nutshell guys, cash conversion cycle, the lower the better. Okay? In fact, negative mas maganda. Kasi ibig sabihin nun, may number of days pa tayo para i-invest yung na-collecta natin elsewhere. A very high, on the other hand, a very high cash conversion cycle is very bad for the company. Kasi ibig sabihin, this will entail higher interest expense. Kasi ipa-finance yung payables niya kasi hindi pa niya nakokolekta yung receivables. Okay, pause muna ako dito guys. Pause for a while and check your formula guys. Check your formula. Okay, sana napanood niyo yung video last time and then I hope you followed along with the formula. Okay, any questions so far? Let me pause for a while and ask if there are any questions so far. Okay, chat na rin please kung clear so far, kung okay. So I'll appreciate your feedback. Kung so far clear guys yung discussion natin on the turnover ratios, the days ratio and the operating cycle and cash conversion cycle. Okay, I'll appreciate guys really many if all of you guys will respond to my query kung clear so far. Okay, so let's give our classmates a few more seconds. Hindi pa tayo nakaka 50% ng responses. Let's give our classmates a few more seconds. few more seconds before we continue. Any questions about the formulas for the turnovers and the days outstanding? Okay, alam natin magka-partner ng mga yan, and we need that to complete for your operating cycle and your cash conversion cycle. Okay, thank you so much for your responses. Although hindi tayo naka 50% plus lang tayo, no? Okay, next guys, yung FATO and TATO. Okay, kindly check your formula guys. Yung original yata na nabigay ko sa inyo, mali yata yung formula. Mukhang net income after tax yung nalagay ko. It should be sales over fixed assets. Okay, this time guys, we take a look at the long-term assets, no, and the total assets. Dito kasi mga mga current assets yung tinitingnan natin dito, no? Receivables, inventories, okay, payables. Okay, then we go to FATO, which is your sales over fixed assets. So the interpretation of this is for every peso of fixed assets invested, the company was able to generate sales of 8.4. So yung FATO ng company mukhang okay kasi 8.4, mas mataas siya kaysa 2021. But it paled in comparison to 2019, and it's better even than the industry or the direct competitor, no? 7 lang sa direct competitor. Pero in terms of total assets, mukhang talo tayo ng benchmark natin, and at par lang tayo nung 2020 at saka 2019. So ano ibig sabihin ulit ng FATO? For every 1 peso of fixed assets, the company was able to generate 8.4 pesos of sales. Yung TATO naman, guys, for every 1 peso of total assets, the company was able to generate 2 pesos of sales. Okay, so these are your FATO and your TATO measures. Kung ilang sales ang nag-generate sa bawat piso ng either fixed assets or total assets. Okay, so with that, guys, those are our asset management ratios. Asset in terms of your receivables, of your inventories, cash, and also our fixed assets and total assets. Okay, let's now go to debt ratio. No? Yung debt ratio natin tatlo. Okay, debt ratio talks about leverage. How well is the company using its debt in order to improve profitability or assess its performance. Kasi remember guys, kapag gumagamit tayo ng debt, no? Leverage din yan kasi nakakabawa siya ng tax. Say may okay, so we discussed that last time, and the formula is simply total liabilities over total assets. So yan lang yung formula natin, no? Total liabilities over total assets. No, kitang-kita yung glaring movement, no, ng debt ratio natin. Nung 2019, it was mas malaking debt natin compared to equity. Lalo na noong 2021, talaga nag-balloon, no? Tumaas talaga. And this is attributable to, if we're going to take a look at our balance sheet, saan ba nanggaling yung taas na yan? Okay, ito. No? Yung total liabilities natin, yung long-term debt natin, lumaki. No? Okay, current liabilities natin, lumaki. Long-term debt natin, nangutang tayo ng malaki. No? 323 up to 1 million. That's why our total liabilities went from 805 to 2.328. Samantalang yung equity natin, pareho lang. Okay? Our total equity is 663, konti lang yung difference due to the retained earnings. No? Ang common stock natin pareho lang, hindi nag-issue ng common stock. Okay, so that's why guys, highly leveraged tayo noong 2019 at 2020. Kaya nga nakita yan sa interest expense. No? From 62,500 naging 176. And that's called the difference sa earnings before tax natin. Kasi konti na lang yung EBIT natin. Tapos lumaki pa yung ano natin. Mababa na nga yung EBIT by virtue of the higher operating cost. Tapos tumaas pa yung interest expense natin. Kaya that resulted into a net loss for 2020. Okay, so let's go back here to our debt ratio. Okay. All right, so si direct competitor 50% siya, balance lang siya, no? Okay, we can say that this is better kasi we said that the debt ratio, the capital structure that optimizes shareholder value is the best. So hindi natin pwede masabi na mas maganda itong si direct competitor. Ang masasabi lang natin guys, tumaas yung debt ratio natin noong 2020. Okay? And this resulted into higher interest payments and a net loss for the company. Okay. So how about times interest earned? See, times interest earned, it tells us how much operating profit do we have, yan, EBIT, per every peso of interest expense. So the higher the better. Ibig sabihin, mas kaya nating bayaran yung interest expense natin kasi mas malaki yung yung operating profit natin. So dito guys, tayo natin ng 6.28, no? Ibig sabihin sa bawat piso ng interest expense, meron tayong 6.3 na operating profit para bayaran yung interest expense. Okay? Noong 2021 at 2020, ito talaga yung worst natin in terms of TAI, no? Noong 2019, 3.35 siya. So almost equal siya sa direct competitor, 6.28, 6.2. Okay, so 6.21 guys, capable tayo to pay our interest obligations. Now, what's this EBITDA coverage? So si EBITDA coverage, my notes ako dito guys. I'll leave you to read this. Okay, but take a look at the formula. So the formula is EBITDA divided by interest payment plus principal payment plus lease payment. So dapat makuha natin yung how capable is the firm, ano yung how profitable is the firm in paying its fixed expenses, fixed costs. Kasi yung interest, yung principal at saka yung lease, yun yung mga fixed cost. Okay, so we have to, let me flash the formula. Tingnan muna natin guys kung kailan ba nagbayad ng kung kailan ba nagbayad ng mga principal. Okay, so nung 2021 guys, ang long-term debt natin, 500, no? Pero nung 2020, 1 million. Ibig sabihin, meron tayong principal payment dito noong 2021. Magkano binayaran natin ng principal? 1 million minus 500,000. Okay, ang natira 500,000. Yun ang binayad natin. So dun sa formula natin na EBITDA coverage, meron tayo sa 2021, meron tayong value for the principal payment. Okay, for 2020, okay, i-compare natin sa 2019, sa beginning ng 2020. Nagsimula tayo 323, nagtapos 1 million. So nadagdagan pa nga yung principal natin. So ibig sabihin nun, wala tayong binayaran yan. So wala tayong principal payments noong 2021. Okay? So if you take a look at the formula ng EBITDA coverage natin, okay, let me flash that formula. Okay. So sum ng C9, C7 at saka C44. Okay, ano yun guys? Yung EBITDA plus lease. How do we get EBITDA? Diba? EBIT plus depreciation and amortization. Kasi sa EBIT guys, that's your earnings before interest and taxes, na-deduct na natin sa depreciation dyan. So kailangan ibalik natin guys si depreciation and amortization. So tingnan natin, C9 plus C7, okay, tama, no? EBIT plus DA, depreciation, that's your EBITDA. Okay, and then we add your lease payments. So may lease payment tayo dito na 40,000. So that will be our numerator, EBITDA plus the lease payment. Okay, and then ang denominator natin, interest plus principal plus lease payments. Okay, so si C10 guys, this is our interest payment. Si principal, sinabtract natin si D31 minus C31, ano to? Okay, ito yung binayad natin na principal noong 2021. Diba sabi ko kanina, at the beginning of the year, meron tayong 1 million na long-term debt. At the end of the year, meron na lang 500,000. So nagbayad tayo ng principal. Okay? And then this one is your lease payment. No? So ito yung denominator natin. Interest payment, which is your C10. Principal is the difference between yung 2021 at saka 2020. No? Plus your lease payment, which is C44. Okay? Ngayon, pagdating ng 2020, wala ito guys. Wala yung principal payment. Kasi sa 2020, hindi tayo nagbayad ng principal. Okay? Control Enter. Alright, so 1.07, ano ibig sabihin nito? The company has 1 peso, okay, 1 peso of profit, no? Of profit in order to pay, okay, in order to pay its fixed cost payment, fixed costs, no? 1 peso. Samantalang yung ano guys, yung competitor natin 8 pesos yung EBITDA coverage lang. So mas capable si competitor in paying its fixed cost, interest, principal, and lease. Tayo 1 peso lang, barely lang tayo. No? In fact, noong 2021, okay, hindi nga tayo, ito guys, tingnan natin to. Okay, so this is EBIT plus, kinapit ko nga lang pala to the right to, no? EBIT plus depreciation plus yung lease payments divided by, this is your interest. Tinanggal ko guys yung ano yung principal kasi wala naman tayong binayaran na principal nung 2020. So this is just interest plus lease. Okay? So wala tayong principal payments kaya binawas ko. Okay, any questions guys dito sa EBITDA coverage for 2020? Okay, so medyo tricky yung ano no. Itong principal titingnan natin kung kailan tayo nagbayad, no? Wala, no? Nawala. So na ako. Okay. Okay, paki-check nga please kung clear so far yung ano. Tapos kinapit ko lang yan dito, no? Copy to the right. Wala tayong linagyan na principal kasi walang principal payments nung 2020 at saka 2019. May principal payments lang natin nung 2021. So tinanggal natin tong B31 minus C31. Okay, pause muna ako guys. Questions so far? Clear ba? Okay, I hope the others, dali magiging sensitive yung mga ito. Kung sino-sino na lang yung hina-highlight mo. Okay, take note guys, yung principal payments, initingnan natin yan kung may binayaran na principal. 2021, nagbayad tayo ng principal. Kinompare natin yung long-term debt natin noong 2021 with 2020. Pero noong 2020 guys, wala tayong principal payments. Kaya, this cancels out. Pati sa 2019, wala rin. Okay? So, clear. Okay. Thank you. Thank you guys. Although hindi pa rin lahat nagre-respond. Ano? Okay. Barely 50% guys ang class ang nagre-respond sa mga queries. Okay, so we now go to profitability ratios. So this is na tayo. How do we measure the profitability of the firm? By looking at different ratios. Okay, first is operating margin. Ano yung operating margin guys? Nakakatulong pag titingnan natin yung formula. No? EBIT over sales. So dito, ano ibig sabihin nito? We already discussed this before, no? Ang sinasabi natin dito, for every 1 peso of sales, ilan yung operating profit natin? Okay, so noong 2021, it was 7 centavos. Noong 2020, okay, because of the very high operating cost, barely 1 centavo lang, 0.3 centavos lang. Noong 2019, halos pareho lang ng 2021, but we are lagging behind us in terms of our profit operating margin compared to our direct competitor. Okay, pag profit margin naman guys, ang tinitingnan natin yung bottom line, net income after tax divided by sales. So both of these guys are compared to your sales. So what was our operating margin in 2021? Around 3.6 centavos. Okay, negative tayo ng 2020 kasi yung net income natin is negative, net loss tayo. No? And then 3 centavos guys for 2019. No? Pero, okay, halos nangalahati lang tayo guys ng direct competitor natin. Ibig sabihin, sa bawat sales sila, mas malaki yung net income nila. centavos sila, tayo mga 3.6 centavos lang. So that's your operating margin and your profit margin. Okay, alam natin that the higher these margins are, the better for the company. Okay, ano naman tong guys, basic earning power. Yung basic earning power, sinasabi dyan, take a look at your formula. Okay, pag tinignan nyo guys yung formula, it should already give you an idea. So sa bawat piso ng assets na in-invest ng company, ilan yung margin na nakukuha natin, operating margin. So we know that the higher, the better to. So noong 2021, 14 centavos tayo. Ibig sabihin, sa bawat piso ng asset na in-invest ng company, we were generating 14 centavos of operating profit. Si 2021, 1 centavo lang, pareho lang tayo noong 2019, pero talo tayo sa direct competitor natin. Kasi sila nakaka-18 centavos sila sa bawat piso ng asset na in-invest nila. Okay? Now this is similar to your ROA and ROE. Si ROA naman, return on assets, ang tinitingnan natin yung net income after tax, yung bottom line na. Ito naman si basic earning power, yung EBIT lang. So your ROA will be lower than your basic earning power. Kasi si net income after tax nasa baba na yan, after we already subtract interest, taxes, etc. So as expected, this is 14%, This is just 7.2%. Ang ibig sabihin nun guys, for every peso ng total asset na in-invest natin, the company was able to generate 7 centavos of income, of profit. Ito, negative kasi negative yung net income natin. Okay, so ibig sabihin nito, sa bawat piso ng asset na in-invest ng company, they're losing 3.3 centavos per peso. 2019 guys, halos pareho lang, better in 2021. But then again guys, talo na naman tayo ng direct competitor natin. Sila 9 centavos, okay, for every peso of total assets invested. Okay, related to ROA is ROE. And si ROE, ang minimeasure natin, magkanong net income ang nag-generate, magkanong profit ang nag-generate for every peso of equity invested by the company. Of course, guys, investors would want a high ROE. No? And if you take a look at this, guys, ang formula natin is simply net income after tax divided by total equity. No? So, si 2021, since negative na yung net income natin, ibig sabihin, naglo-lose out. No? For every peso of equity invested by shareholders, they're losing 17 centavos. Okay, so it was a lot better in 2019 where shareholders were earning 13.3 centavos of profit for every peso of equity invested. Went down a bit in 2021. Pero again guys, our direct competitor is walloping us. No? Talon-talo tayo in terms of these profitability ratios. Okay, then we have earnings per share, EPS. Ano naman itong earnings per share? Magkano guys yung profit na generate ng company for every average shares? Okay, so ang earnings per share, ang formula nito, okay, it's simply your net income, okay, divided by the average number of shares. Ang shares natin ando dito. Here, average shares natin. Okay? So, 1.45. Ano ibig sabihin nun? Sa bawat isang share, guys, nag-generate yung company ng 1 peso and 45 centavos ng profit. Pero talo tayo sa direct competitor kasi sila 1.85. Mas malaki yung EPS nila. Okay? Alright. Then, meron tayong price earnings ratio. Okay, very important tong ang tawag dito PER. No? Others call this the PER, price earnings ratio. It tells us how expensive the stock of the company is, the stock price of the company. Kasi ang formula niya, price per share divided by the earnings per share. So ang pinapakita natin, magkano yung market value niya, tapos magkano yung ina-expect ko na ma-earn per share dun sa magkano yung per share niya ngayon compared to magkano yung earnings niya per share. So it's a simple formula. So this is equal to the market value. C39 natin, that's the market value. So ang price niya is 12.17 ngayon. Divide natin ng EPS. Ang EPS is, let's see, here. Earnings per share, yung na-compute natin sa taas kanina. Okay? So ibig sabihin nito, 8.4. Ibig sabihin nito, any investor should be willing to pay 8.4 pesos market value ng share ng stock to earn 1 peso of earnings. The higher the PER, guys, price earnings ratio, the more expensive. Kasi ibig sabihin nun, binibenta sa market, kunyari 50 pesos yung PER niya, price earnings ratio. Ibig sabihin nun, an investor should be willing to buy that stock at 50 pesos and expect to earn only 1 peso per share. Okay? So the higher the PER, the more expensive. So ito, mas expensive yung yung competitor natin kasi 9.5 siya. 9.5 per share. Tayo 8.4 per share lang. Okay? And what could be a reason for this? But mas expensive siya. Kasi most probably, guys, based on the performance of the firm, so mas maganda kasi yung mga fundamentals niya. Yung mga fundamentals, yung ratios yan. Okay? So siguro mas in demand to sa market ngayon. Okay? Mas maraming gustong bumili nito. Okay? And they're willing to take a larger amount of risk, 9.5, kasi alam na ba nila na this company is performing better than our company. Okay, ang PER, guys, it doesn't make sense kung negative yung EPS. Okay, kasi remember, it's the price, D39 divided by the EPS. Since the EPS is negative, then kaya nga ginelo to, no? This makes no sense. No? So we don't interpret if the PER is negative. Okay, pag yung negative yung PER, hindi natin in-interpret yan. Kasi wala namang market value na negative. Hindi naman pwedeng bibili ka ng stock na yon tapos bibigyan ka pa ng broker ng pera para mag-own ka ng share na yon. So a negative PER has no meaning, no? Dito, negative PER has no. Okay? So ang ini-interpret lang natin, guys, yung positive na PER. Okay? Alright. Ito, price to cash flow ratio. Ano naman to? Ang price to cash flow ratio, guys, again, kino-compare natin yung share price divided by magkano yung operating cash flow per share. So here, kailangan natin computein yung operating cash flow. Okay? So dito, guys, okay, I hope you will also compute for this. We have already an exercise. It will be a good activity for you to compute for the statement of cash flows para ma-compare nyo. Guys, tinala natin kanina dito, ha. Okay, ang cash natin noong 2020 is 7,282. Ang cash 2021 again 14,000. So ibig sabihin nag-increase tayo ng 6,718. Yun ang kailangan makita dito, guys. This should be equal to 6,718 dapat yan. It should be equal to 6,718. Okay? Dapat equal yan. Alright, so our operating cash flow will be our net income after tax, no? Plus your depreciation. That will be our operating cash flow. Net income after tax plus depreciation. Okay, so let's do that. So take a look at our formula for our price to cash flow ratio. Okay, so it's your share price natin, C39, divided by what's our operating cash flow per share. Our operating cash flow per share will be our operating cash flow. Ito, sinama up ko yung net income after tax at saka depreciation. Divided by the average of your per share kasi. So average ng number of shares, okay, for 2021 and 2020. So we're dividing it by the number of shares. Okay? Sige, I'll stop for a few seconds for you to get the formula of this. Okay, sorry. For us to be able to compute this for 2020, baguhin natin yung formula pala, no? Dapat sum ng, dito natin ilagay guys sa ano, dito natin ilagay sa income statement natin. Sum ng net income after tax and our depreciation. Okay, so I'm changing the formula so that we can copy this to the right. Okay, so binago ko lang guys yung formula natin. Kinuha ko yung sa column C so that we can copy this to column D. Enter. Okay, and then okay, may mali yata ako. D13, D17. Okay. D13, D7. Mataas kasi yung depreciation natin dito. D13. Okay, okay lang. Okay, so ano ibig sabihin nito guys? Price per cash flow ratio. Ibig sabihin ang mahal ng ano natin, no? 27.5. Okay, in 2020, our price per cash flow was very expensive. Ibig sabihin nito guys, an investor should be willing to buy that stock at 27.5 to get 1 peso of operating cash flow per share. Okay, so this figure guys tells us that this is not a good, ang mahal nito, no? Okay, ang mahal nito, and this is because this is compounded by a very low net income. In fact, negative nga eh. Negative nga yung net income natin. Okay, so to be realistic about it, we're comparing 7.6 with 5.7. So mas mahal si direct competitor natin, no, compared to us noong 2021. Okay, so last guys, yung market value ratios natin, madali lang to, no? Yung market value ratios natin, it's simply your total equity divided by the average number of shares. Okay, so if you take a look at our formula, total equity natin nasa C35 divided by the average number of shares natin. Okay, so kinapi lang natin dito yan. Okay. So book value natin, book value per share, ibig sabihin nun, guys, okay, sino mas magaling? Yung ano natin, yung direct competitor o tayo? Mas magaling si direct competitor, no? Kasi yung book value, okay, yung book value ng, it's a measure of the total equity, value ng total equity divided by the number of shares. Ibig sabihin, guys, for every share, okay, for every share ng stock, ang total equity natin, 13.6 dito, ito 11.3 lang. And lastly guys, yung market to book value ratio. So here we're comparing yung market value per share divided by the book value per share. So ang formula natin dito will be market value per share. Alam natin yan, magkano ba per share? Okay, given. Okay, ito yung cost niya ngayon, no? Market value per share divided by book value per share. Book value per share is, diba sabi natin, total equity divided by the average of the shares. Okay, which is actually Okay. Diba itong C35 na to, ito, yung book value per share na to, saan to? 11.29, 11. Diba ito yun, diba? Ito. Okay, ito. So, we can just compute this C39. Kasi na-compute naman natin yung ano, yung book value per share. Ito yun eh. Ito yung book value per share. No? Okay, so it's the same. So pareho lang siya. Yung 0.08, 1.08. Okay, let me pause for a while, guys. We have around 14 minutes to discuss the remaining. Kakayanin natin to. Okay, any questions so far, guys, dun sa mga ratios natin? Ratios natin ng liquidity, asset management, debt ratio, profitability rate ratio, and market value ratios. Thank you. The rest, guys, may questions ba so far? Okay, sige, balitan ko yung question ko. Clear so far, guys? Okay, thank you. Clear so far? Okay, no questions? All right. So let's go to DuPont. No? DuPont is a company, guys. Okay, it engages in several products, chemicals, iba-iba, no? So, the early 1900s, ang pinaka-importante measure ng return on equity is sabi nga natin, di ba, yung investors, yung shareholders are very much interested to know if the company was performing well in reference to as far as the shareholders is concerned. So yung ROE was one of the most important measures at that time. Okay? Eh ngayon guys, mas marami ng mas important, mas ang measures, mas powerful, like ROIC, EVA. So hindi na lang yung ROA yung tinitingnan. Tinitingnan pala yung si ROA guys, pero not as much as before. So si DuPont, okay, because the focus on that at that time was to look at the return on equity. What it did was to come up with a breakdown of ROE. Okay, so nagsimula dito yung ROE, di ba? Net income after tax divided by total equity. So what DuPont did was to multiply this by two ratios: sales over sales, total assets over total assets. And di ba since one naman yan, it will not affect the value of the ratio ROE. So by rearranging the terms, so si net income, dinivide natin ngayon ng sales. Okay, si sales, dinivide natin ng total assets. Tapos si total assets, dinivide natin ng total equity. So pareho lang yan guys, no? Rearrange lang natin yung denominator. Okay, so now this is called your DuPont three-way ratios or three-way analysis. Bakit? Kasi in-explode natin si ROE into three other ratios. Okay, number one, this net income after tax over sales, this is your profit margin. No? This sales over total assets is your TATO. And this one, hindi pa natin na-meet to, yung total assets over total equity. This is called your financial leverage multiplier or your equity multiplier. Okay? So ang sinasabi ni DuPont, if the company wants to increase ROE, kailangan i-increase niya si profit margin, i-increase si TATO, i-increase si financial leverage multiplier. So itong tatlong to. So hindi na lang ROE ang tinitingnan natin, no? Tinitingnan natin ngayon three ratios. In fact, guys, meron ding five-way analysis. So you explode ROE into 5 different ratios, no? So ito ang tinitingnan natin yung three-way analysis. So how do you improve ROE? Improve profit margin, improve TATO, improve financial leverage multiplier. Okay? So paano tataas guys si financial leverage multiplier or equity multiplier? Let me just show you guys how we increase FLM. Kasi ang formula ng FLM is total assets over total equity. So if we replace total equity by total assets minus total liabilities, and then divide everything by total assets, okay? So magiging 1 to numerator, and then if we distribute yung total assets sa denominator, total assets over total assets is 1, total liabilities over total assets is debt ratio. Okay, so si financial leverage multiplier, which is just total assets over total equity, is equal to 1 minus debt ratio. Okay, so gusto natin guys, tumaas tong expression na to. Okay, now here guys is a table which shows ano yung value ng FLM, financial leverage multiplier, based on the debt ratio. So if you notice, tingnan nyo lang yung formulas dito ha. Pag tumataas yung debt ratio, tumataas si financial leverage multiplier. Okay? So the higher the debt ratio, ibig sabihin, mas malaking contribution ng debt kaysa equity, mas tumataas yung financial leverage multiplier. Pag tumaas yung financial leverage multiplier, tataas si DuPont. Ang ibig sabihin ng DuPont, guys, okay, tataas si ROE. Pag tumaas si ROE, ibig sabihin, mas malaking profit ang nag-generate per peso of equity. Okay? So that's this formula. So yung formula na to, pinapakita na the higher the profit margin, the higher the TATO, the higher the financial leverage multiplier, the higher the ROE. So take note guys na pag tumaas yung financial leverage multiplier, kahit debt yan, ibig sabihin tumataas yung debt ratio natin, tataas si equity. Okay? Tataas si return on equity. Okay, so here guys, this is ROE. Compare lang natin, no? ROE, alam natin yung formula nito. It's just net income after tax over total equity. Okay, or it's just the same as this one, di ba? Pwede natin i-copy na lang to dito. May ROE na tayo dito, di ba? Ito, here. You can copy that. So 12.8, negative 17.1, at saka 13.3. Alright, then explode natin to, no? Kunin natin yung profit margin, TATO, at saka FLM. Paano si profit margin, guys? Okay, inano ko yung formula. Profit margin is net income after tax over sales, which, meron na naman tayo niyan dito, no? Yan, ito. Okay, we have that actually, no? 3.6. 3.6. So you can just copy that there. Copy natin yung mga profit margin. TATO meron na rin tayo, guys. Nasa asset management ito. TATO is 222. No? So yan lang yun, no? Okay. We can do the formula or we can just copy. Ito pinakita ko lang yung formula, guys, no? And it should be the same as our TATO above, these mga ratios natin. And then equity multiplier. Ito yung wala pa tayo, no? So si equity multiplier is just your total assets over your total equity. Okay? Okay. And this is the yung sa ano natin sa direct competitor. Okay, therefore guys, to compute for the ROE, it's equal to profit margin times TATO times equity multiplier. So we just use the product function. Product nitong mga to. Okay, to arrive at your ROE. So dapat pareho lang, guys. So here we were able to show that indeed your ROE is equal to these three measures: profit margin, TATO, and equity multiplier. Okay? So sabi ni DuPont, in order to increase ROE, kailangan taasan si profit margin, si TATO, at saka si equity multiplier. Kasi these three factors are directly related to ROE. Okay? In fact, naroon ng five-way analysis, no? And-explode pa to into 5 ways. You can just search for that, guys, in the internet. So okay, napakita natin, guys, na pareho lang, no? Kinuha lang natin yung mga products nito, and na-prove natin na okay, tama. Pareho lang talaga sila ng straightforward na formula ng ROE. So ang lesson dito based on DuPont, sabi niya, if you want to increase ROE, and we want to increase ROE, okay, kasi gusto ng shareholders yun, then focus on the profit margin, TATO, and equity multiplier. Okay? So yun ang kwento nitong DuPont analysis na to. Okay, last guys, yung Altman Z. Okay, interesting to, no? Si Altman Z, si Edward Altman, in the 1970s, he did some statistical analysis And he wanted to predict yung bankruptcy. Sabi niya, pwede natin ma-predict kung yung company magiging bankrupt in the next 2 years by looking at certain ratios, okay? Looking at certain ratios and then computing them and then computing for the Altman Z, okay? So ito yung formula ng ratio, no, ng Z-score. 1.2A plus 1.4B, 3.3C, 0.6D, 1E. Yung mga A na yan, guys, ito, no? Yung ratio na yan. Yung 1.4, 1. Is constant yan. Okay? There are many types of Altman Z ratios. Merong ratio for the private companies. Ibig sabihin hindi publicly listed. Ito publicly listed to kasi may market value siya. Okay? So, yung ratios natin, guys, i-compute lang natin. So, apat dito divided by total assets. Yung isa over total liabilities. Okay, so first, yung ratio A natin. It's your net working capital divided by total assets. I think talagay ko lang dyan, guys, working capital. Pakilagay lang na net working capital para mas clear. No? So what's the net working capital? It's your current assets minus current liabilities. Then i-divide natin ang total assets. So yun lang, guys, yung net working capital over total assets. Okay, then ito retained earnings. Alam natin yan. By retained earnings divided by total assets. So just follow the formula. Okay, then your EBIT. Okay, we have our EBIT in the income statement divided by total assets. And then this one we have market value of equity. Ano yung market value ng equity? It's equal to your share price times the number of shares outstanding. Ito lang yan, no? Share price times the number of shares outstanding. So that's your market value. Okay? Divided by your total liabilities. And then sales over total assets. Okay? Alam natin yan. That's your sales over total assets. That's simply your theta. Meron na tayong theta. Okay, so we just computed all of these ratios, and then i-multiply natin yung mga factors. Multiply natin yung mga factors sa kanila. No? Okay, ang ginamit natin na formula here, just the sum product. Okay, ang kagandahan ng sum product, instead of just multiplying individually, you get the products first, and then you sum it up. So ang formula niyan, you highlight the array of the different factors and the ratios, and then use the sum product. Ang gagawin ni Excel dyan, 1.2 times 0.47, etc. And then add everything. So the ratio is 4.34. Okay, ang ratio natin 4.34. So why don't I, okay, Control C. I-copy ko nga sa inyo, guys. Paki-check tong site na to. Okay, kindly check this site, guys. Ito, yung sa CFI Corporate Finance Institute. Let's take a look at that. So this one. So it tells us what the Altman Z score is all about. A numerical measurement used to predict the chances of a business going bankrupt in the next 2 years. So ito yung model na yun, guys. If the Altman Z score is between 0 and 1.8, ibig sabihin nun, there's a great chance, great probability that the company will become bankrupt in the next 2 years. It's called your distress zone. If the ratio is between, or the Z score is between 1.8 and 3, ibig sabihin gray zone yan. Ibig sabihin hindi definite yung model. It may or may not become bankrupt in the next 2 years. Safe zone, guys, pag greater than 3, ibig sabihin napaka-safe ng company. No chance for it to become bankrupt in the next 2 years. So this is what the Altman Z measures. No? Hanggang 1.8 yung distress zone. And this has been adopted, guys. Hindi lang siya basta-basta formula. Nakita na to, no? In different scenarios, nakita to na medyo reliable itong formula na to, developed by Edward Altman. No? Finance professor siya. In 1968 niya dinevelop to. Okay? So any questions, guys? Ito yung ano natin, ha? Ito yung Z-score natin. Okay? Ito yung ginamit natin. Okay, so you can refer to this. Okay, so sabi ko nga dito yung working capital, ginawa natin net working capital para clear tayo. It's a difference between current assets and its current liabilities. Okay. All right, so going back to our model. Right? So 4.34 ang conclusion natin. Okay. Very small probability for the company to become bankrupt based on 2021 figures in the next 2 years. Okay, it's already time, guys. So may I have just one last minute just to recapitulate. So sabi natin, guys, yung ratios natin, we base it on common size, we peg it to sales. Napaka-importante na tingnan natin kung ano yung relationship ng mga income statement account natin over sales, and we compare it over the years, and then we compare it with the benchmark. So yung year on year, titingnan natin kung ano yung increases ng accounts natin over time. Sa balance sheet naman, ang common size statement, kino-compare natin sa total assets. Okay. And then we went back through yung mga measures natin, yung NOWC hanggang EVA. Very important sa atin yung EVA at saka ROIC because it tells us if the company was able to create value for the shareholders. Okay, and then we went through the different ratios, yung 5 klase, liquidity, asset management, debt ratio, profitability ratios, and market value ratios. These ratios should not be taken in isolation. They should be taken in context, dapat compared with different years and compared with the direct competitor or the industry to see if the company was performing well. Okay, and then the DuPont, guys, sinabi natin na DuPont, which was a measure used in the early 1990s, to look at ROE, that can be decomposed into 3 elements. Okay, and we said that increasing these 3 elements also increases ROE. And lastly, guys, yung Altman Z natin, sinasabi natin ito, mapipredict natin based on this model if the company will become bankrupt in the next 2 years or so. Okay, with that, guys, we end our session on financial ratio analysis. So this will be the coverage of your quiz this coming Wednesday. So let me stop recording.